Thank you, and thanks all for joining today's call. As you will have seen, as Haley just addressed, we released our full year 2019 results this morning and also declared a second interim dividend to shareholders. We've also published our 2019 annual report, and this can be found on our website. So we have an updated corporate presentation, which is now available on our website, and which I'll be talking to you during this call. So I hope you're all able to see this presentation as I turn through the slides. And as mentioned, there will be an opportunity for questions at the end of the presentation. So turning to slide 3, I'd like to start by outlining our business resilience as evidenced by our 2019 results, but also our fundamentals. We are a Tanzania domestic natural gas supplier, and natural gas is a critical player in the in-country energy landscape, essential to providing the universal energy access in a low-carbon environment. We also see natural gas working hand in hand with zero-carbon technologies as part of the energy mix, which we'll talk about a little bit further on. Operational delivery, as you will have seen, we met our guidance in 2019 of 70 million cubic feet per day, and we reiterate today our 2020 guidance of 65 to 75, which remains unchanged. We do have increased capacity to supply up to 100 million cubic feet per day without additional capex, and we have a bit of line of sight on where that additional near-term expected demand is likely to come from. As we say, the Cantonese 1 power extension is planned for later this year, which we expect to see an additional 20 to 30 million cubic feet per day of additional demand, which we can easily meet. Financial strength is really speaks to itself, but our revenues are underpinned by long-term fixed price gas contracts with both TPDC, our main off-taker, and TANESCO. With a low cost of production and a limited, unchanged 2020 work programme, we're in a very robust financial position, which has enabled us to maintain our dividend policy established last year and declare a second interim dividend today, bringing the total distribution for 2019 of $3 million. Just to move through to slide 4, whilst we have reported a strong set of fundamentals for 2019, we also believe we have a sustainable and positive 2020 outlook, even against the backdrop of very difficult macro climate that we're all experiencing. As I mentioned, our production guidance remains unchanged. We do feel we have a measured and robust range that we feel we can maintain. In terms of how the COVID-19 pandemic is affecting Wentworth and our operations, the government of Tanzania has to date taken a very robust and proactive approach. Whilst there are very few cases of COVID-19 having been reported to date in Tanzania, they are taking precautionary measures very seriously. We have 0 COVID-19 cases at Mnazi Bay, but are in discussion with our operator More and Prom as to ensuring we have precautionary measures in place to mitigate the risk of any operational disruption. We do see the risk of operational disruption at Mnazi Bay as minimal, mainly due to the remote location. We've also been supporting the Tanzania government during this difficult time, and we've committed to providing PPE to a local hospital in Mtwara, near Mnazi Bay operations, and also a couple of hospitals in Dar es Salaam. And we've been working together with More and Prom, Pan Africa, Shell, and Pavilion as part of an oil and gas syndicate to support and help the government at the moment. As you would expect, from a Wentworth perspective, we are taking precautionary measures to protect our staff in Dar es Salaam, and we have temporarily closed our office with all staff working remotely, which they're able to do, so we're fortunate to have that situation. So positive, sustainable outlook for this year. So moving forward to slide 5, really want to just set the scene here about Tanzania's energy poverty challenge and just a little bit of education about where we see the social and economic growth coming from for the country. Tanzania is one of the largest countries in sub-Saharan Africa. The population is expected to more than double between now and 2050. And although there is positive economic growth in Tanzania, the pace of growth is not fast enough to sustain that growing population. What we're also seeing on the right half of this slide is really that Tanzania is shifting to an industrial economy away from historical agricultural base. And the need to increase low-cost, reliable electricity supply and the access to power is really required to drive that more rapid economic growth. We see natural gas as being and will continue to be a key source of that increased energy supply. Just moving to slide 6. We talk a little bit more here about that power access gap and why it is growing despite the economic growth that we've seen in the country. The current access rate is only 37%, which, as you can see, is significantly lower than its regional neighbour, Kenya. A critical task for the government is to address that persistent lack of access to electricity and clean cooking and historical unreliability of electricity supply, which has acted as brakes on the country's development for many years. The Tanzania government has a goal to deliver universal energy access within the next 10 years and was one of the first African countries to adopt the sustainable energy for all. And you can see that the bottom right, within 10 years, by 2030, Tanzania aims to deliver the universal access through low-cost solutions. But I think there is an acknowledgement that this cannot be achieved purely through zero-carbon technologies and renewable energy sources, and it needs to work hand in hand with natural gas. And we believe that natural gas will continue to play a critical role in reaching the national grid, and as we say up here as well, both in the cities but across all of the rural areas as well. And natural gas is clearly the affordable and reliable low-cost, low-carbon solution for the country. Moving through to slide 7. How is that universal access to be delivered? And we've spent a bit of time thinking about this. As you can see, natural gas accounts for more than 50% of current power generation. And we do see a material contributor to the energy supply being hydropower. And you can see that here, hydropower currently accounting for around 35% of power generation. But hydropower is not always reliable, and we've seen that evidenced in countries, so there is still a need for this fundamental sustained level of natural gas production to meet those energy demands. The current hydropower capacity in country is approximately 390 megawatts, which can displace circa 50 million cubic feet of gas today when it's running at full capacity. And we do see this as evidenced through our lower nominations for gas demand during those seasonal periods. We've looked at the International Energy Agency's Africa Energy Outlook, which I just draw your attention to the graphs on the right-hand side. Top graph, the first graph, is based on Tanzania government stated policies. And you can see that there will be a significant growth of natural gas to 2040 as part of that energy mix. But on the second graph, in the Africa case, based on current population growth projections, an annual GDP growth of possibly more than 9%, Tanzania's economy could be 7 times larger in 2040 than it is today. And this graph really highlights the electricity generation required to meet that demand. And you can see the diversifying energy mix and improving energy efficiency, and those are key to achieving economic growth. But I think it's very clear that in either case, natural gas will be a key component and absolutely has to underpin the Tanzania domestic energy strategy. Which takes us on to slide 8, and where does Wentworth fit into this domestic energy strategy? So we are clearly a leading natural gas supplier in the domestic market today. There are only 2 suppliers into the new natural gas infrastructure, which is the red pipeline you can see on the map on the left-hand side. The Mnazi Bay joint venture, obviously, ourselves and Moran Prom, and supply from Songo. There is brand new gas infrastructure with that pipeline, with capacity of up to 785 million cubic feet per day. That pipeline is currently only approximately 12% utilised. But what's important for Wentworth is not just that we're focused myopically on our production at Manazzi Bay, but how this feeds into the whole picture. And that includes the development, distribution and transmission of that power around the country. It's not enough just to be supplying into Dar es Salaam. It's how do we reach those rural areas across the whole country. And that's really what we're trying to show in that picture on the middle of this slide, is the number of planned transmission lines that we believe will enable the grid of more than half of the connections by 2030 from the grid, given that existing and that planned coverage. So Wentworth currently plays a critical role in the country's energy infrastructure, and we believe there's opportunity to increase that going forward. Just move you on to slide 9. This slide really wants to try to tell you that we feel our business is fully aligned to the UN Sustainable Development Goals, and how we believe we can make a real positive social impact to Tanzania as a country. Since 2005, we've been committed to contributing that positive social impact, largely through our work with Wentworth Africa Foundation. And we've been running impactful projects targeting predominantly at improving education and personal health in our local communities. But more broadly, we believe that our gas has significant social impact across the country. And we see this through the direct sustainable development goals here on the left, particularly 7, affordable and clean energy, 8, decent work and economic growth, and 13, climate action. We do also believe that this feeds into the enabling impact, SDGs. Energy access is the bedrock of any society, and is the enabler for basic needs such as household electricity, supports at-home learning and education, which can be done in the evenings, refrigeration of medicine, essential supplies, etc. These are things that are easy to take for granted in a developed world, but are crucial for us to achieve that positive social impact. And we're also committed to quantifying that social impact going forward of our gas production. And we're looking to improve our social impact disclosure as part of our ongoing sustainability reporting. So you will hopefully see that evolving over the coming months, and we're committed to making that a key ambition and priority for 2020. So that sets the scene of where we believe our real growth opportunities come from. And I just want to spend a few moments just on our results. So if I can take you to slide 11. Really trying to demonstrate the simple platform now that Wentworth enjoys post a period of restructuring, and some robust fundamentals that speak to themselves. We have delivered within guidance, and we believe we've set manageable and measured guidance for this year, which remains unchanged. And this is really due to the sustained production we see, because from the reliable asset base that's performing very well for us, both operationally and financially. And we can see that evidenced through the ability to support our continued dividend policy. We've delevered the assets. We continue to enjoy strong cash flow. We continue to maintain our dividend policy, and we have reduced G&A. So we believe we have a very efficient and robust platform for the growth that we've outlined. Slide 12 just seeks to provide a little bit more colour on production over the last few years. And really that this is fairly robust, and we are now also understanding the seasonality a little bit more as we move into commercial operations for that asset. And we look forward to delivering within guidance for 2020. Moving on to slide 13, I've briefly touched on this, but our dividend, we believe, is a real differentiator for Wentworth. We established a new sustainable dividend policy in 2019, obviously before anyone appreciated the global crisis that we would find ourselves in the first half of 2020. But we have a robust financial position in order to support and maintain that dividend. And we are one of only 3 AIM-listed E&P companies that are committed to paying a dividend in 2020. So against the backdrop of cuts and suspended dividends, we feel pleased that we're able to deliver this for our shareholders. And importantly, it emphasises and highlights our confidence not just in our asset, but in Tanzania as a stable jurisdiction, and also our commitment to our shareholders to remain financially prudent, which becomes one of our key ambitions for 2020 as we look to slide 14. Important for us to remain financially disciplined, as we've just mentioned, and also to grow production to support the demand that we've outlined for the majority of this presentation. We're striving for responsible in-country growth in order to meet those growing energy demands and help Tanzania solve that access to power gap that we've just discussed. But I think it's important to also say that we're not after growth for growth's sake, only where it's responsible and sustainable to do so. And we continue to work with TPDC, who is our key in-country stakeholder, to further explore growth and work together to support Tanzania in solving the energy access gap. That concludes my presentation. Thank you for taking the time to listen. It is appreciated.